What's good, everybody? This is KG from Five Star Speculators, and I'll be doing a breakdown on gold. Took a trade today in gold, so I'm just going to be doing a breakdown just to show you guys why I took the trade, right? Because people just take trades, but they don't know why they took the trade. So first, I just want to look at what's my daily bias, right? Where's the daily candlestick going for the day, or where is it most likely to go, right? I think that's the right sum to use. So looking at what happened previously is that we reacted from a daily key level, right, which is the order block. If you're from the ICT community, you know what an order block is. So we got a reaction from the order block, right? So my my thought process works like this. So I want to move from key level to key level, right? So the next question that I'm going to ask myself is where is the next opposing key level? Keyword opposing key level, right? So where is the next opposing key level? Because that's where we might see a reaction, right? The next daily opposing key level. So this is what I had. So we traded through the fair value gap yesterday, which is a fair value gap and a volume imbalance right there. But I'm just gonna mark the fair value gap here. So price dropped inside of the order block here, and then we started reacting away from it, right? So reacting away from it, how far can we go? And then we see a some sort of a reaction because this is a daily key level, right? So and also marking a daily key level doesn't mean price is going to react when it gets there. You need to wait for the reaction, and then you need to like confirm it first, right? So this is the midpoint of the FVG, right, which is consequent encroachment, right? So this is where price, it's a sensitive area where you understand price might reverse anytime from here, right? So what I like to do is I like to drop to the 4 hour time frame just to have a clear view of things. So what I also had was this is what we had, a fair value gap on the 4 hour time frame, right? Which is also a reaction point. So if you can just look at what was happening here, this is the daily mean threshold, right? So uh we also had the 4 hour fair value gap. So these two are aligning, right? So this is inside here. This is where we're anticipating some sort of a reversal, right? This is where we're anticipating some sort of a reversal. So now we just want to confirm that, okay, there is a reversal value. We don't just want to come in here and then start taking a trade. We want to have like a confirmation that, okay, the trade is, happening or playing out. So what I normally do on a daily basis is I mark my Asian range, right? I just mark out my Asian range. So again, we don't have a bias, a daily bias, but what we have is two daily key levels, right? So we reacted from a daily key level down here, and then we were now inside of another daily key level, right? So we might see a reaction. We were not sure, but if you can just not drop, look to the left side here. We have what? A fair value gap, right? We have a fair value gap. So this is a daily key level, right? And then we are inside of a H4 key level, and then now uh we can refine to this 15 minutes key level. So only when price hits this level, this is where I'll be looking to see some sort of a reversal going to the downside, right? So, but another key thing is, if okay, sharp, you want to take a trade going to the downside, where's your target and why is that your target, right? So already I can see this. This is trend line liquidity, this is trend line liquidity. And if you can just drop down here, this is another one, right? So this is more like an equal low type of thing. And then we also understand that below the Asian range is what is liquidity, right? So during the day, we like playing around with Asian highs and Asian lows, right? In terms of liquidity. So taking a trade here, you just want to drop it off way below the Asian range. Why? There's also an order block here plus the fair value gap, right? Order block plus fair value gap. So price would want to come rebalance somewhere around here, right? So the basis of the trade was just based on that, right? So another conference that I had was I used the intermarket analysis, which is silver. So I used gold and silver to find the SMT divergence, right? So if you can look at this high that formed yesterday here, right, around 5 p.m. The hardest high. Today we never took out that high, right? We never took out that high today. And if you go to gold, we took out that high today. We went for the high took out the liquidity from that high. So this is this high. Baba. So we took out this high. So this is the SMT divergence, smart money technique divergence. So this is symbolizes that price is reversing, right? So whenever there's a reversal, guys, there's always going to be a divergence. Whether you're using smart money reversal or you want to use a what's this RSI, you can also use it. I think I do have it here. Yeah, you can use a RSI. If you don't know what a divergence looks like, look at here. They give you a higher high, but this one is more of a lower low here, right? So this is the divergence. This symbolizes that a reversal is about to unfold, right? So since I saw that happening and we hit our key level, I just wanted to drop to the 5 minutes time frame, right? So this is where I like taking my trades from, right? So we hit that and then we drop down. We we dropped below this low, right? So meaning we took out external range liquidity. Some of you guys call it POS, some, market structure breaking or whatever you want to call it. But, I just see the external range liquidity. So now I'm looking for internal range liquidity. So this is where I took my trade inside of this fair value gap. So what was price doing basically here? It was just rebalancing this fair value gap and then, looking to drop to the lower time frame. So, but a nicer trade was actually this one, when price dropped below here, taking out this external, coming back to internal. This was a nicer trade as well, going to the downside. But I was already in here. Adjusted my stop loss to break even. So this one came through as a pullback, and then price started pushing, taking out liquidity, and eventually taking out the previous session low. So if the trade came in around here, it was a three something, 3R. Just did this below the Asian. It was more of a three. It wasn't a four, three something. I think my stop loss was a bit higher. Yeah, so this is the trade that I took today, right? So going to the downside. So I did have like a bit of a confluence from the TXY as well, right? So I was just looking at the TXY if it's bullish. And also, I don't, it's not a must for you to look at what the TXY is doing to trade gold. Because sometimes, they're not aligning the way. But most of the time I find that they actually do align. So I was looking at this equalize up here, right? To sweep this equalize. Once we took out this buy side, that confirmed to me on the other side that, okay, we are still pushing to the upside. So I did have a fair value gap here. It's kind of small, but let me just zoom in. So we did have a fair value gap here. So we went from external to internal, and then now we were just pushing all the way to external range, right? So that's why I knew, okay, dollar is going to be strong, from here to here, dollar is strong. So if you can look at this one here, we had a strong dollar coming through as well. So this is why I took the trade. So again, we were trading from key level to key level, right? So we had a daily key level up here, where we anticipated some sort of a reversal to unfold, but also understanding that it's not a confirmed daily bias, right? So yeah, that's why I took the trade. So I'll just show you guys the what do you call this? The trade proof of trade. Yeah, so this is a trade that we took today. Gold. Just hold on. Yeah, so again, we just waited for them to give us a reversal up here instead of a key level. Then we took our external range. Then we came back for internal range, right? Which is this FVG right here. So just waited for them to come inside of the FVG, then take a trade, put a stop loss above, and then price started melting towards the downside. So this is proof of trade that ICT concepts work. I know people say, they're skeptical and all of that. So please, subscribe to our YouTube channel, follow us on Instagram, and join our Telegram channel for like free signals. Just gonna be dropping free signals in the group. Yeah, let's call it a day. Call it a day.